Can a limited liability company qualify as a 501c3 nonprofit? The answer is yes, but with significant restrictions and complexities that make it an uncommon choice for most charitable organizations. A nonprofit LLC is a limited liability company formed for charitable purposes. Like traditional LLCs, it offers liability protection for its members, shielding them from the debts and obligations of the organization. However, to qualify for tax-exempt status under Section 501c3 of the Internal Revenue Code, a nonprofit LLC must meet strict criteria established by the IRS. The legal landscape for nonprofit LLCs varies significantly by state. Most states do not specifically recognize nonprofit LLCs in their statutes. Kentucky, Minnesota, and Tennessee are notable exceptions that do have provisions for them. This state-level variation creates the first hurdle for those considering this business structure. Nonprofit corporations remain the standard vehicle for obtaining 501c3 status. These corporations operate under state nonprofit laws with formal governance structures, including bylaws and boards of directors. They follow established patterns for operation, fundraising, and reporting that are well understood by regulators and donors alike. LLCs, by contrast, offer more operational flexibility but face additional scrutiny when seeking nonprofit status. The IRS imposes stringent requirements on LLCs applying for tax exemption. Most critically, all members of a nonprofit LLC must themselves be recognized 501c3 organizations or government entities. This means individuals cannot directly form and own a nonprofit LLC. The formation documents for a tax-exempt LLC must include specific language required by the IRS. These include statements limiting operations to exempt purposes, prohibitions against transferring membership to non-exempt entities, and guarantees that assets will be used for charitable purposes upon dissolution. The organizational documents must also forbid merging with for-profit entities and include contingency plans if a member loses its tax-exempt status. These requirements create significant challenges. The ownership restriction means individuals must first establish or partner with existing nonprofits. The formation documents must precisely align with IRS expectations. Some states provide no legal framework for nonprofit LLCs at all. And the complexity typically results in higher legal and administrative costs compared to forming a standard nonprofit corporation. Despite these challenges, nonprofit LLCs serve valuable purposes in specific situations. They are commonly used as subsidiaries of existing nonprofits to manage risk. For example, a nonprofit might form an LLC to hold property with environmental liabilities, or to own vehicles that could generate insurance claims. This structure isolates potential risks from the parent organization. Nonprofit LLCs make the most sense when multiple tax-exempt organizations collaborate on joint ventures. Two or more 501c3 organizations might form an LLC to run a shared initiative without creating an entirely new nonprofit corporation. They also work well for program-specific activities, where separating assets and operations provides strategic or risk management benefits. The formation process typically begins with establishing a nonprofit corporation that obtains 501c3 status by filing Form 1023 with the IRS. Once approved, this organization can then form an LLC subsidiary or partner with other nonprofits to create a jointly owned LLC. The LLC must then apply for its own tax exemption by demonstrating it meets all IRS requirements. For those seeking alternatives to this complex structure, several options exist. Fiscal sponsorship allows new initiatives to operate under an existing nonprofit, avoiding the need to form a separate entity. Low-profit limited liability companies, or L3Cs, combine profit motives with social goals, but do not qualify for 501c3 status. Some founders simply operate traditional LLCs with social missions, reinvesting profits into their cause without seeking tax exemption. The nonprofit LLC structure represents a specialized tool in the nonprofit sector, most appropriate for existing tax-exempt organizations looking to form subsidiaries or joint ventures. For most individuals starting charitable organizations, the traditional nonprofit corporation remains the simpler, more widely accepted path to achieving tax-exempt status and fulfilling their mission.